Hello and welcome to our first Principles of Accounting 2 tutoring session. I'm Victoria, and if you were with me last semester in Accounting 1, I'm glad to have you back. If you're new, nice to meet you. I'm the tutor with the Academic Success Center for OBU for Accounting. This is an online course, so I'm going to be doing podcasts over the different chapters that you have in Accounting 2. So today we're going to start with Chapter 12. This should be the first chapter that you're going over in Accounting 2. And what we did last semester is going down the balance sheet and the income statement. And you might have remembered at the beginning of last semester, if you took Accounting 1, which you should have had at least, maybe not up to this point, just a couple of weeks back, but at some point in the past. You should have known of the 4 financial statements. The one we're going to talk about today in Chapter 12 is the statement of cash flows. The big idea with the statement of cash flows is converting net income to a cash basis, okay? So let's say, just for an example, okay, your net income, okay, if you remember last semester we used depreciation expense as allocating value of a certain asset, okay? When you depreciate a piece of equipment, for example, okay, it does not lose cash. Okay, so your net income has subtracted out that depreciation expense, okay? But that depreciation expense isn't on a cash basis, okay? So the idea of the cash flow statement of cash flows is to find the net increase or decrease in cash, okay? So you need to know first that there are 3 categories on the statement of cash flows. There are operating activities, okay? There are investment activities and financing activities, okay? And what I have here that I'm going to show you is a statement of cash flows, okay? And this is, I believe, with the PowerPoints for Accounting 2, and possibly may even be in the text. This is just a statement of cash flows example. And we're going to be using the indirect method. So you should have read the chapter before watching this. And the direct method isn't as often used, but the indirect method is a lot more efficient. So that's what we're going to use, okay? So what I mentioned just a moment ago is that there are 3 large categories, okay? I said operating expenses, okay? That's here in orange, okay? Operating activities is converting your net income to a cash basis, okay? So after reading the chapter, you might know that operating expenses have to do with your revenue and expense accounts, okay? Operating activities are your increases or decreases in your revenue accounts and your expense accounts eventually, okay? So you have to think big picture. What will eventually, if not already, go into a revenue or expense account, okay? Another thing that goes into operating activities are gains or losses on plant assets, okay? We'll get to that when I talk about the investing activities in a minute, okay? So, as I just said, the operating activities have to do with your revenue and expense accounts, okay? So this first one you see here is depreciation expense, okay? And you might notice over here on the right that it's added back, okay? The very first starting point for the statement of cash flows is net income, okay? The operating activity section is going to adjust your net income, okay? So you might notice how these 3 are added, subtract, subtract, add, subtract, okay? What you're going to be doing is analyzing whether or not the activity in the operating section of the statement of cash flows is adding to cash or subtracting from cash, okay? So let's go through and think about some of these, okay? So like I just said with depreciation expense, when you have a piece of equipment that's depreciating, it is not losing cash, okay? So if we had $9,000 of a depreciation expense, that does not represent cash. So we get to add that back to net income, okay? This had been subtracted from net income, but since it had nothing to do with cash, we get to add it back, okay? The second section on the operating section of the statement of cash flows is the loss on disposal of plant assets. You might notice that one. We'll go back and look at that one in a minute, okay? The third one, as you see, is decrease in accounts receivable, okay? So you have to think about this big picture. If you are decreasing your accounts receivable, okay? Accounts receivable is when you're billing someone and they'll pay you back later, okay? So if you're decreasing your accounts receivable, you can assume that people are paying you, okay? Because when you credit accounts receivable, your debit in a journal entry will be cash, okay? So if you are decreasing your accounts receivable, you get to add that back to net income, okay? Because you're getting the cash, okay? The next one is increase in inventory, okay? So if you're increasing your inventory, most likely that's not a gift, okay? If you're increasing your inventory, you're either going to pay it on accounts payable, or you're going to use cash, okay? So if you're increasing your inventory, you can assume that you can subtract that from net income because that is actually lowering your cash, okay? The next one is increase in prepaid expenses, okay? Increase in prepaid expenses. You can assume if you're prepaying something that is lowering your cash at that moment. Okay, so increase in prepaid expenses, that's also an asset. That's why it's the same as the inventory. Increase in accounts payable. Okay, increase in accounts payable, you'll notice is added back to net income. If you are increasing what you owe someone, okay, if you're giving someone an IOU, that means you're not decreasing your cash at that moment. You're just saying, I will pay you later, okay? So that's why you get to add that back to net income, okay? And the very last one is decrease in income taxes payable, okay? And that's a liability, and if you're decreasing the liability, that means you're paying off the liability, so you would subtract that from net income, okay? So what we've done here is we started with $145,000 of net income, okay? And at the end of the operating section of the statement of cash flows, you have $172,000, okay? The difference is the $172,000 is a cash basis, okay? So that is what the statement of cash flows does, is it converts net income to a cash basis. So I mentioned that the operating activities that we just went through have to do with revenue and expense accounts, okay? The second section on the statement of cash flows is going to be investing activities, and that'll be in yellow here, okay? Investing activities have to do with changes in long-term assets, okay? So that's property, plant, and equipment, land, things like that, okay? Long-term assets. So you'll go through, and just as we did up here, you'll analyze why this is either subtracting or adding, okay? So the first thing under the investing activities is purchasing a building. If you're purchasing a building, you're assuming that your cash is going down to actually pay for the building. So you subtract that from your net income, okay? Purchase of equipment, same principle. If you're purchasing equipment, you're assuming you're going to pay for it, so you decrease your cash. The last one is the sale of equipment, okay? If you're selling equipment, you can assume you're going to get some money, so you get to add that back. Okay, if you'll remember last semester, we had one chapter that was dealing with book value of long-term assets, okay? Up in the operating activities, I mentioned that you would have gains and losses, okay? If you were to buy a building, okay, and let's say you've used it for 20 years, okay, and you're ready to sell it, okay? Let's say that the book value of that building is $50,000, okay? Let's say, for instance, that you sell the building for $55,000, okay? So if it was a book value of $50,000, but you sold it for $55,000, you have a gain on the disposal of the plant asset of $5,000, okay? That gain does not represent cash from an operating activity, okay? The gain is actually represented in the proceeds from the disposal of the plant asset, okay? So if you have a gain, okay, that is not actually representing cash, okay? So you would subtract that in your operating activities, okay? Because that does not represent cash you got. That just recognizes that you had a gain, okay? So in this example right here, you had a loss on disposal of plant assets, so you add it back, okay? So for a gain, you subtract because it's not actual cash you got, okay? And for a loss, you add it back because you really don't have a loss of $3,000, okay? And if you have a couple of questions about that, reply on Moodle to the question and answer forum, or I know the textbook has some explanation about that as well. The last section on the statement of cash flows are financing activities. Okay, so just how investing activities have to do with long-term assets, financing activities have to do with long-term liabilities. Okay, so issuing bonds, issuing stock, preferred or common, anything like that. Okay, so we can just look at this like we've analyzed the other sections. We issued common stock. Okay, if you're issuing common stock, you're going to get some cash for that, so you can add back for your issuing common stock. Payment of cash dividends. If you're paying cash dividends, you can assume that your cash is going down. Okay, so you would subtract that. Okay, so you'll notice that at the end of each of these sections, okay, there's a balance. Okay, so for operating activities, it was $172,000. For our investing, it was $141,000, and then for your financing is negative $9,000. And also the 141 was negative. Okay? So what you're going to do at the end is find your net increase in cash. Okay? And you're going to do that by totaling those numbers. Okay? So if you were to take the 172,000 minus 141,000, subtract 9,000, you would get $22,000, which means the cash basis is $22,000 more than what is represented in net income. Okay, so I hope that was helpful. That was just some of the main concepts of the statement of cash flows. You should be able to recognize, as far as your homework goes, recognize what types of activities go into each of those three sections, and you may even have an assignment or two of making a statement of cash flows. And this is a very good kind of outline of how to do that. So I hope that was helpful, and as always, if you have any questions, post them to Moodle, and I hope to see you next time.